Welcome again to the RandSource Weekly Wrap. As usual, we'll cover what happened this week and talk a bit about what you should be doing with your money going forward. In the news this week, we had US CPI numbers coming out, as well as producer price inflation numbers. The CPI numbers were slightly lower than the previous number, so it dropped from about 8.5% to 8.3%. That is still an extremely high number for the US. But that being said, it was also above what had been expected. We expected to fall all the way down to 8.1%. So it seems right now that we've hit a temporary peak with regards to inflation in the US, but the fall is not taking or not occurring as quickly as some had hoped. This would put further pressure on the US Fed to be quite aggressive when it comes to basically, monetary policy, actions, keeping rates pretty high, moving quickly, and increasing rates maybe at a higher, quantum each time that had been anticipated. We also had numbers out of the UK showing that they had a small recession in the last quarter. This is after we had a small pullback as well for the US in the last reading we had. I do think right now we are seeing some impacts coming through from the Russia situation, though it is small. But at the same time, we are seeing some impact coming through because of inflation and as well as rising interest rates, and that's going to be an important factor going forward from here. With inflation remaining a bit higher for a bit longer, and interest rates obviously having to rise, I would be pretty confident in stating that I would anticipate a bit of a small contraction in both the European Union, the UK, as well as the US. Over the next little while, we'll have at least a recession, which is basically 2 consecutive quarters of negative growth, some point in the next couple of years. That's been the case, I think, since 1955. Every time you've had in the US unemployment below 4% and inflation above 5%, above 4% as well, you've had a recession in the next couple of years, basically 100% of the time. Looking also at the US, there's some news breaking apparently that, remember I've been talking about the food issues. This is a food-related issue, not quite directly related to what we're talking about in terms of the Ukraine and fertilizer, but right now the US is undergoing a shortage in baby formula, which is an amazing development. Understand that baby formula, for those that need it, is an essential item. You can't swap out baby formula for something else, because babies don't eat anything else besides either breast milk or formula. And the particular kind of formulas that are particularly affected by this are specific or special kinds of formulas for babies that have certain dietary requirements. So certain babies, for instance, are unable to have dairy, amazingly enough. Some babies are lactose intolerant, some babies have certain allergies and so on. And so there are specific brands and specific makes of formula that are required for these particular children. And at the moment, that's not available. I mean, the amount of brands that are of places that are out of stock of formula is like 40%. So almost half of the places that you normally expect to go in and get formula don't have it anymore. This is due to a couple of things. Firstly, you can't import baby formula into the US for commercial purposes, so that's basically prevented them from importing. And the second thing is that one of the big plants that produces these kinds of formulas, run by a company called Abbott, has been shut down, and the formula it's produced has been recalled because of health and safety issues. Apparently, a couple of kids have died because of formula from these plants, and there's a belief that there is some level of, safety concerns, contamination occurring at these plants. About 4 kids have been hospitalized and 2 have died. So that's obviously, it makes sense to cut back on production, or at least shut down production until you find out the reasoning. That being said, the situation is so dire that we are seeing, for instance, in some cases, 4 to 10 times increases in pricing on specific kinds of formula, and some parents even taking their kids to the emergency room to make sure that they get fed. Because our parents basically trying to get 3 weeks of formula to last basically a month or maybe longer, and stretch it out, which is not a great thing. You don't want to be basically putting your baby on a diet. That's a terrible way to go forward. But it shows that the supply chain issues around the world are still a bit crazy. Speaking of that, we've also had an interesting bill passed in the US called the NOPEC bill. If you read some articles, you know what that is about. Basically, it is a measure against OPEC, trying to prevent them from restricting supply in order to boost prices and that negatively affect consumers. This bill has been around for more than 2 decades, but this is the first time it's gotten out of the Senate Judiciary Committee, and it got out of the committee with a 17-4 vote, so it wasn't even close. So I do think there's not an insignificant chance it might actually have a chance of going all the way to the president. If the president does sign it, firstly, you've got to have the Congress, the Senate, and the president signing this thing. If it goes to all of these things, we could see quite a big geopolitical, shift. Countries that are involved in OPEC, Saudi Arabia, Venezuela, etc., are going to be quite, miffed about this, to say the least. And in fact, their ministers have come out and said that apparently, if the US does go ahead and do something like this, you can anticipate something in the region of about a 200 to 300% rise in price of petrol, or gasoline, or oil rather. So 2 to 300%. So we're talking about, $300 oil prices per barrel. That's going to almost certainly cause a global recession. In other news this week, we had some numbers out of some important companies. We had Google come out with this I/O conference where it does appear that Google is trying to be the new Apple. We have a Google Watch, Google Tablet, Google Pixel, which is their phone. They're trying to create a really integrated infrastructure around Google as opposed to just Android. So that's an interesting thing to look out for. We had Disney results. Disney appears to have been growing its subscriber base, which is in sharp contrast to companies like, for instance, Netflix, which have been under a great deal of pressure with regards not just to stock pricing, but also the fact that they've kind of stalled when it comes to setting up new users, and in fact, have started to lose users over the last couple of periods. In fact, they anticipate losing about 2 million, I believe, subscribers over the next couple of years. The fact that Disney is out there actually increasing its subscribers, obviously from a low base because they started later, is in sharp contrast. It is an indicator that the market may be a bit more competitive, and that's obviously bad for anyone operating in a competitive market. Your profits can be under squeeze, and some of the practices you had in the past may be no longer valid. And then finally, we basically are looking forward to the next little while or so. I do think that we are right now. We had Goldman Sachs come out and say that they expect wheat prices to rise about 15% in the next couple of months. That is, in addition to what we've already seen, which has already been quite a significant rise. And they anticipate upside risks for the next couple of years. So it's obviously an important factor to watch out for. Our oil prices have recovered a little bit of their losses. We are seeing some of the lockdowns in China working as they would have. I mean, these are the strongest lockdowns we've seen anywhere in the world. If you literally can't go and meet anybody, you're not going to spread the virus. And so the virus numbers have come down quite strongly in China, which may indicate that they may be opening up some things in the near future. If that is the case, we could see oil prices rise further, because one of the reasons that oil prices are under pressure is because of the lack of demand out of China. And I think that is the general trend we're seeing in the world at the moment. Inflation heading higher, growth under pressure, and even things that have caused temporary measures like the lockdown in China being removed. So anticipate more inflation coming through. Anticipate possibly the Federal Reserve and other reserve banks having to go out and basically be more aggressive when it comes to hiking rates. And that's what that's going to mean for the market is I think quite common sense could be under great deal of pressure. Before I go, one final thing. I don't really like Bitcoin, you guys know that, but I have to talk about it and other cryptocurrencies. Bitcoin is now at about $27 a coin, the last time I checked. That is a new low for the company, for the coin, for the last year or so. And this is an interesting fact about Bitcoin. It's never been a case where Bitcoin prices have ever broken a previous year's low. So if there's a level for the previous year that was the low, the prices never go below that level. This time around it has. We are also seeing some of these stable coins. These are coins that are supposed not to go up and down, but be linked on a very stable basis to a currency, have broken. Tether is under pressure. Another coin out there has actually fallen significantly more. And there are billions and tens of billions of dollars tied up with some of these stable coins. If we do see those coins under pressure and do see those coins actually break their linkage with the dollar, we could see quite a significant blowback into the total economy because of it. Because when you have something worth tens of billions blowing up, it's going to cause ripple effects in the market. Okay, so that's me for this week. I hope you have a great weekend, and I'll speak to you guys again next week. Cheers.